All right, Candle Range Theory Trader back with you with another video, just talking about the most important candle in the Candle Range Theory, and we're talking about Candle 2. And what I'm going to do in this video is show you some high probability Candle 2 setups. So, of course, Candle 2 being the middle candle in the Candle Range Theory, you got the range. I call it the money candle. Some people call it manipulation, either way. And then the distribution or expansion to the downside. So in this case, but there's three time frames that you're going to look for the Candle 2 setup: the daily chart, the 8-hour chart, or the 4-hour chart. Now, the locations are the most important part of this. Now, first off, I want to say that these aren't exclusive. These are just the most high probability, meaning that if the candle 2 in the candle range theory creates the higher or lower of the day on the 4 or 8-hour chart, that's higher probability because you're counting on that high or low to hold. If you have a fair value gap expansion on candle 2, and I'll show you this, on the daily, the 4-hour or the 8-hour, that can be an explosive setup for the move to reverse, and as well a sweep of a swing high or swing low either on the daily, 4-hour, or 8-hour chart. I do not trade sweeps or swings because I don't like looking back in time too much, but it is valid. So, and as well, just for a bonus, I don't trade this either, but if you want to trade the candle 2 as being the high or low of the week on the daily chart, you can do that too. So let's take a look first at the high low of the day. This is just an example of a 4-hour chart. The indicator that I use to isolate the high or low of the day is an indicator called Mark Levels on TradingView. So you can look at that. And it's just going to put a high of the day marker and low of the day marker on your chart for you automatically, so you don't have to do it manually. But this is the same basic 3-candle pattern. You got the range candle here, but like I said, the money candle or candle 2 in the middle right here, which was created at 9 p.m. And then once this candle closes here, you get a slight retrace and then it just tanks. But the thing is, the key part is that this candle 2, created the high of the day and then closed back inside the range. So when you have that, the probability of price reversing or actually even continuing in the direction that candle 2 set is greater than just a random candle 2. Because if you look at this candle right here, this could be a range candle and this could also be a candle 2 pattern. But if you notice, price just kept going up. So to filter out sometimes of the case of these happening, sorry, let me go back. The case of these types of candle happening, wait on a daily basis to see if candle 2 can make the high of the day and then just reverses off of that. That's what you're looking for. Here's a long example where you have a range candle and then candle 2 being created by the 1700 or 5 p.m. Eastern Standard Time candle. And then starting at 9, price just expands to the upside. So every now and then, sometimes candle 2 will be created first thing when the session starts. So it just depends. But for the most part, this was a valid candle 2 because it created, as you can see, the low of the day. And then expansion came, price pretty much stayed inside the range, and you were just off to the races. So with the fair value gap expansion, what you're going to look for is candle 2 has a wick that goes into the fair value gap, but the body closes outside of it. Okay, the whole candle should not be inside the gap. You want to see price go into the gap and then come out. So let's take a look at how that looks here. So this right here is the range candle, this red candle right here. Candle 2, this is a daily chart. You're not trading down here. You wait for this day to close. This was a Friday. And look at all this. These are days. So price rose after the wick went into the fair value gap on the daily chart and closed outside of it. Okay, once that close happens, that confirms that, okay, we may be dealing with a possible long trend where you possibly could hold for multiple days. So this was obviously the Monday candle. This was Tuesday where the meat of the move came. Wednesday, Thursday, and then Friday. But price rose for the rest of the next week, all the way up, and then just had some retrace here, but then kept right on going. So, but this again is an example of a fair value gap expansion. Remember, wick goes into the gap, body closes outside of it. Candle 2 cannot be inside the gap. It needs to close outside. Remember that. That's very important. Here's a short example. This is a 2-candle candle range theory, but the price action is still just as valid. So you have a range candle here. This candle 2 goes up into the gap, but the body closes all the way down here and it closes below the range. So we simply just look for a continuation. We have a slight continuation here and then another continuation here for a larger price movement to the downside, even creating another fair value gap. This was on the 4-hour chart though. So these are 4-hour fair value gaps, range candle, like I said, wick into the gap, body close outside of it, and then just look for a continuation down. So if you want to just look for candle 2 that creates that price action there. You can specialize in that if you'd like to. Swing highs and lows. This is where price will sweep a swing high or low, but it closes back inside of it and does not break it. How does that look? And like I said, I don't trade these because I don't want to look all the way back in time at these prior candles for swing highs and swing lows on large time frames. But is it a workable trading system? Yes, it is. So you have here a swing high where you have a high, higher high, lower high. Again, daily chart. Okay, so this is a valid swing high pattern. Price goes down and then comes all the way back up. So you have a high. Here's candle 2 right here. Sweeps above the high, closes inside of it. That's what makes this a valid candle 2 that sweeps a prior swing high but closes inside. Then you expect what? Price to the downside. And it does come in a major way. This is more so, I'd say, for swing traders than day traders. But can you trade it? Yes, you can. Here's a long example. This is on the 4-hour chart where you have a swing low right here. Price shoots up, it retraces all the way down, and then here you have another money candle that sweeps below this low, below this swing low, and then close inside of it. This isn't the best example because the next 4 hours doesn't give you a straightaway, but then this trade took 8 hours to play out. That's 4 and that's 8. So, but that's how it shook out. So again, sweep below the swing high, close back inside of it. So everybody who went short down here is in a world of hurt because price just automatically rocketed out of it. So that's how that looks. So another bonus though is the high or low of the week on the daily chart. So if you happen to catch a money candle or a manipulation candle that creates the high of the week, you have a range. Then you have the candle 2 right here. And again, it's notated by the high of the week. So you're counting on this high to hold, and then you have price action straight to the downside. It does complete the range. That was on a Wednesday. Okay, so this is Thursday where you're actually trading, but you let Wednesday play out. You don't try to trade Wednesday. You trade Thursday for the best odds. And then this is a long example for a Tuesday candle 2. You have the range candle here. Tuesday went below, closed back inside. It created the low of the week. And then Wednesday, bang, large expansion move to the upside. So that was it. So the A plus setup. The A plus setup is a candle 2 that makes the high or low of the day and at the same time expands out of a fair value gap. To me, it doesn't get any better than this. How does that look? Here it is right here. So you have a range candle here. You have candle 2 that, notice, it creates the low of the day. And what does it also do? It dips into a fair value gap and the body closes outside of it. So that's what we call confluence, right? And then the next candle, boom, is a straight rise. This is on a 4-hour chart. Okay, but the expansion, the fair value gap expansion and the low of the day was created by the 9 p.m. candle. So, and then just straight rise to the upside. So if you want to add those two and just say, hey, look, I only want to trade candle 2s that dip into a fair value gap and also close outside of it, while your setups may be lower, this could contribute to a possible higher win rate. But again, I don't get caught up on win rate. I'm more so about risk reward. But if you want to have those 2 signs to take a trade, feel free. So in conclusion, while candle 2 can strike at any time, these notions and these setups can increase your odds of success. If you only want to trade the A plus setups, you can, feel free. But remember that daily candles for the high of week have to be a candle 2 setup. Okay. And then you expect a reversal off of that. So that's just a bonus one. I don't trade that either. I don't trade off of weekly highs and lows. I only prefer dailies because they play out faster. But sweeps of swing highs and swing lows are more so for swing traders, but you can get big moves off of them if you can catch a good one. Hold it for a larger swing. And I don't recommend trying to trade candle 2. I know people try that. But if you want the best odds of success, just let the market show you what you want to see and then react. When you trade candle 2, sometimes you predict, because I'll end it with this one. Remember, I just showed you a non-valid candle 2, which was right here. See, this on the surface looks like a valid candle 2, this red candle right here. But the better candle 2 was right here, which created high of the day, right? So because you are going to get stopped out of some of these setups. So to increase your odds, again, you're just going to look for higher low of the day candle 2s, fair value gap expansion candle 2s, or candle 2s that sweep a swing higher or low. Or if you want to be a swing trader and trade off the higher low of the week, look for a candle 2 that is going to do that. And they're really just dojis at the end of the day. Those are the best type of candle 2s to me. Tight bodies and that lead to large bodies. And remember, the large bodies sometimes lead to tight bodies when it comes to the candle. So that's everything I got. I appreciate your time and attention. Thank you for watching and have a great rest of the day.